Figma is now a public company. The ticker is FIG on the New York Stock Exchange. Figma builds cloud software for design and product teams. People use it to design, prototype, and collaborate in real time. The planned Adobe deal was canceled in 2023. Adobe paid a $1 billion termination fee. In July 2025, Figma priced its IPO at $33 per share. The listing drew strong demand and heavy attention. What Figma does? Figma runs in the browser. It feels fast, like a desktop app. Multiple people can edit the same file at once. You see each person's cursor and changes in real time. Designers, product managers, and engineers work in the same space. The main products are Figma Design and FigJam. Figma Design is for UI and UX work. You can make wireframes, mock-ups, and interactive prototypes. FigJam is for whiteboarding and workshops. It is used for brainstorming, mapping, and planning. There is also Dev Mode for handoff to developers. It includes specs, tokens, and code snippets. This helps teams move from design to code faster. Figma uses a product-led growth model. People start with free or team plans. Then companies upgrade as they add more seats and features. How Figma makes money. Figma uses subscriptions. Most revenue is seat-based. As teams grow, they add more users. Companies also adopt FigJam and enterprise features. Security, admin controls, and compliance drive upgrades. Single sign-on, audit logs, and data controls matter to large firms. Design systems and developer handoff increase stickiness. The more teams rely on shared components, the harder it is to switch. This land and expand flywheel lifts revenue over time. Financial highlights. Figma is growing fast. Revenue for fiscal year 2024 was about $749 million. That is up about 48% year over year. Gross margin in 2024 was about 88%. That is very strong for software. Figma posted a net loss for the full year. The company invested heavily in research and sales. In the first quarter of fiscal year 2025, revenue was about $228 million. That was up about 46% year over year. Figma reported quarterly net income in that period. Large customers are rising. Over 1,000 customers pay more than $100,000 per year. Net dollar retention was in the low 130s. That means existing customers spend more over time. IPO and trading context. The IPO in July 2025 raised about $1.2 billion. Demand was strong. The stock jumped on its first day. Then it pulled back in the days after. This is common for new listings. Price discovery can be volatile. Figma is one of the most watched tech IPOs of 2025. It is seen as a test for the broader software IPO market. Product momentum and AI. Figma is adding AI to speed up work. The goal is faster prototyping and a cleaner path to code. AI features help with layout, content, and component choices. Some tools can generate copy and design variations. Other tools can suggest structure and improve consistency. Dev Mode aims to reduce friction for engineers. It gives clear specs, variables, and tokens. The focus remains on performance and collaboration. These are core strengths of the platform. Competition. Adobe is the largest competitor. Adobe is improving overlapping features. Adobe also integrates design with creative tools and developer flows. Other rivals include Sketch and newer AI-first tools. Some tools focus on rapid generation. Others focus on specific steps in the workflow. Figma's edge is browser-native collaboration at scale. Its plugin ecosystem is deep. Its enterprise controls are strong. Still, execution and product velocity matter. Figma must continue to move fast. Key metrics to watch. Watch revenue growth each quarter. Can Figma sustain growth near 30 to 40%? Watch net dollar retention. Staying above 120% is a good sign. Watch the number of large customers. More customers paying over $100,000 per year is positive. Watch operating margin. Improving margins show better efficiency and cost control. Watch gross margin. Keeping gross margin in the high 80s supports strong unit economics. Watch free cash flow. Positive and growing free cash flow shows quality and resilience. Watch product adoption. Dev mode usage and AI feature adoption are important signals. Go-to-market motion. Figma starts with bottoms-up adoption. Students and designers learn the tool early. Teams try it for free or at low cost. Then success spreads across departments. Enterprise sales add security, governance, and scale. This two-engine model is powerful. Organic usage reduces acquisition cost. Sales focus on expansion and standardization. This supports strong net dollar retention. Customer value proposition. Figma brings teams into one space. Work happens in real time, not in files passed by email. Design systems keep brands consistent. Shared components ensure quality and speed. Prototypes cut down on back and forth. Dev mode clarifies what to build. Admins get control and visibility. These benefits save time and reduce errors. Over years, that compounds into large value. Risks. Competition could intensify. Adobe can bundle price and cross-sell. AI-native tools may move faster in certain areas. Macro conditions could slow seat expansion. Budgets can tighten and hiring can freeze. Post-IPO volatility can be high. Insider lockups and sentiment can move the stock. Execution risk remains. Enterprise sales cycles are long. Large product bets may take time to pay off. Security and uptime are critical. Any major incident would be serious. Valuation considerations. High-growth software stocks are sensitive to expectations. Multiples track growth durability and margin progress. Figma has elite gross margin and strong expansion within accounts. But valuation must reflect competition and the path to steady profits. Monitor the mix of growth and efficiency. Sustained growth with rising operating margin is the goal. Free cash flow adds confidence that earnings quality is real. Scenario outlooks. Bull case. Growth stays strong. Net dollar retention remains above 120%. Large customer count keeps rising fast. Operating margins expand as sales and R&D scale. AI features boost adoption without hurting margins. Dev mode becomes a standard part of the workflow. Base case. Growth moderates into the high 20s or low 30s. Net dollar retention cools, but holds above 120%. Margins improve steadily with size and focus. Free cash flow grows gradually. Bear case. Growth slows into the teens. Net dollar retention falls toward 110%. Competitive pressure rises. Heavy investment delays margin improvement. The stock re-rates to a lower multiple. What would change the thesis? Green flags. Faster enterprise wins and larger deals. Rapid adoption of dev mode and AI features. Consistent operating margin expansion. Sustained free cash flow growth. Stable gross margins in the high 80s. Red flags. Net dollar retention slips below 115%. Gross margin declines meaningfully. Large customer growth slows. Churn rises or expansion stall. Product velocity lags new AI competitors. Execution priorities. Keep performance high in the browser. Maintain collaboration as a core advantage. Ship AI features that save real time, not just DMOS. Deepen the design-to-dev bridge with tokens and code. Strengthen enterprise security and compliance. Support open ecosystems with plugins and APIs. Measure impact with clear product metrics. What to watch next? Quarterly results and guidance. Any updates to revenue growth and margins. Trends in large customers and seat expansion. Signals on AI feature usage. Adoption of dev mode in engineering teams. Partnerships with cloud and developer platforms. Post-IPO, lockup expirations and trading dynamics. Final take. Figma is a category leader in collaborative design. It shows strong growth and elite gross margins. It is building a bridge from design to development. The IPO brings attention and volatility. Long-term performance depends on execution. Watch growth, retention, margins, cash flow, and product momentum. If Figma delivers on these, the story stays strong. If these slip, the market will notice quickly. Disclaimer: this content is for information and education only. It is not investment advice. Please do your own research. Consider speaking with a licensed financial advisor.